Once again, thanks for joining us. Holly Shields here with Kalkine Media. Today, I'm going to take you through some tips to help deal with market volatility. Last week has been a difficult one for investors across the globe. The rising bond yields have spooked the markets worldwide, which has also increased the volatility substantially. Last week, the CBOE VIX index that measures the US market's volatility skyrocketed more than 30%, while the ASX 200 VIX index has risen by close to 15%. With the volatility coming back, investors need to adopt some of the time-tested strategies to safeguard their portfolios during these challenging times. Here's a list of 3 easy-to-follow yet quite effective strategies to withstand market volatility. Firstly, stay diversified. Diversification is the go-to strategy when it comes to countering the volatility of the markets. Diversification allows an investor to distribute the portfolio's risk across various asset classes or sectors. This reduces the concentration of risk pertaining to specific securities in the portfolio, which eventually generates more stability in the returns. However, it's to be noted that an investor shouldn't over-diversify his portfolio, as it may also affect the magnitude of the return. Secondly, consider a controlled position size. One of the easiest ways to reduce the volatility is to reduce the size of positions. Position sizing is a different concept in itself and holds imperative importance in the subject of risk management. Position sizing could also become the difference between a winning portfolio and a losing one. Smaller position size also helps an investor to stay invested as MTM swings during a volatile period reduces. And finally, stay ready with cash. During the volatility, the market moves in both directions, which eventually creates frustrations and compels an investor to exit. However, these are the times when an investor can get securities at an attractive price. While the market takes a correction, an investor should be ready with cash to buy that dip and get a bargain for that share. Once again, thanks for tuning in.